and welcome. You're watching Your Trades on ET Now with me, Snehisha, and with me, as always, is Priyanka. And Priyanka, well, rather lackluster day of trade coming in for us. You know, we started comfortably above those 23,340 levels, in fact, and we've receded quite significantly from the day's highest point, starting shop around 24,194. So even below the 24,200 mark is where we've shut shop for the day. A 1%, 1/10% cut coming in on the Nifty, and the same thing could be said for Sensex as well. The rally seems to have fizzled, you know, because Friday was a good day for us. Yesterday was another very good trading day for us. But seems like the correction that we have been seeing in the market, other than these two sessions, is starting to seep in once again for the markets, because you have Nifty that's closed below the 24,200 level. However, today the broader markets provided some kind of support to the market. Mid-cap index was flat. However, a small cap continues to outperform the markets. Remember, 2% gain yesterday coming in yesterday. 0.8% higher is where Nifty small cap has closed for the day as well. A couple of sectors that were in focus today. FMCG was the winner through and through, but it was overtaken by IT. Nifty IT is your top sectoral gainer in today's trade, and the likes of large cap as well as mid cap IT names have done pretty well for themselves today. Nifty FMCG also in focus on the back of that HUL board note coming in for the ice cream business demerger. So that's something that kept the stock as well as the entire index going. However, what did not do well today, Nifty Auto was in the slow lane today, of more than a 1% cut coming in for Nifty Auto today. The likes of M&M, Tata Motors, Eicher, Ashok Leyland, Maruti, Exide, Hero MotoCorp, all of them in the red in today's trading session. However, a couple of more stocks were in focus, the likes of the entire defense pack. You had Swiggy that was in focus on the back of a brokerage note coming in, wherein it was a bullish note coming in from UBS. They've initiated buy on Swiggy with a target price of 515, so that was good. The entire real estate pack was in focus today, and the rally continued for real estate, albeit it was slightly fizzled out today, but in the green nonetheless. Nifty Realty has ended rather flat. So you had the Jefferies note coming on likes of Lodha, Godrej Properties and DLF making it their top pick. Colgate also on the back of the Jefferies note was in focus today. So lots of individual high flyers in trade today, but nonetheless they could not provide the kind of support that the Nifty was looking at today, and we've ended with a slight bit of a cut on the Nifty coming today.
Absolutely, it was more of a consolidation trade what we saw on the index. We started at the highest point of the day and then we started to drag down. Nifty, if you look at the broad range, it was more of a 200 points of range what we saw on Nifty. Bank Nifty were dragger today, and majorly drag was coming in from the large cap private banks like HDFC Bank, Axis Bank, even SBI Bank. They were the draggers today. But then if you notice, Snehi, that after 315, in fact, we did saw some sort of recovery. Looks like the intraday trades were getting squared off by the end of the day. But then, yes, broader market, that was also up by small, mid-cap index was up by 0.3%. Small cap also gained more than 0.5%. And majorly, the gains coming in from stocks like Tata Tel, Idea, Yes Bank. In fact, all the entire telecom pack was buzzing in trade today, especially Vodafone Idea, that one closed with gains of more than 12%. And this one especially after cabinet provided in principle approval on telecom companies' bank guarantee issue. This was one reason which kept the momentum high for all the telecom stocks. Couple of other names, Ashoka Buildcon, this one jumped nearly 3.5%, especially after it received an LOA for NHAI project worth rupees 1391 crore. You've addressed Swiggy also, this one also buzzing in trade today. But then a lot of sub-pockets, if you look at sub-sectors, a lot of brokerage counters were on radar today. They were buzzing in trade today. Capital goods have been on a move from last 3 days. In fact, again, we saw many of the stocks from the capital goods space and many names from the broader market in chemical space. They were buzzing in trade today, especially with the likes of stocks coming in like Thirumal Chemicals, PCBL, India Glycol, Linde India, and in fact, Aarti Industry. A lot of sub-pockets were also performing, gaining in trade today. Now, but then let's understand what should index traders do at this point in time. Is there a phase of consolidation what we can expect for tomorrow also? Soni Patnaik joins in to talk about the derivative trade. Soni, welcome to Your Trades. Tell us the kind of move we've seen. Is it we've seen a broad range of 200 points on Nifty. And banks were not participating much today, especially the heavyweights like HDFC Bank. What should we make out of it?
Hi, good afternoon, Priyanka. Thank you for having me on your show. See, I think Nifty and Bank Nifty, they are in the final expiry week as of now, and they're just taking a breather after the 2 days of continuous up move that we've seen. Nifty has a broad range, somewhere around the range level of 24,300 to 24,350 is acting as a resistance Very aggressive call writers have positioned themselves today just ahead of the expiry. So any move above 24,300 in Nifty can take the short covering rally towards 24,500 odd levels. Now that is again going to be quite crucial. However, until that expiry gets over, it may remain sideways. The rollovers may take place in the range between 24,000 to 24,300 on a broader side. So I think that's the range that we can look forward to. Maybe the expiry December series, one can see it heading higher towards 24,800 odd levels, but that can only work out in the December series. Bank Nifty, although today it has underperformed, it still holds on to a comparatively better strength than Nifty, because Bank Nifty is also consolidating in a 1,000 point range between 51,500 to 52,500. Now, there's very strong resistance of around 50 to 500, and it is a weekly resistance. So perhaps by Thursday or Friday end, if Bank Nifty is able to cross above the 50 to 500 mark on a weekly close basis, you can see a very sharp rally, short covering rally rather, in Bank Nifty, which can take the index towards 54,000 on a positional basis for December series. So I think it is very important to keep a focus and radar in Bank Nifty with the support of 51,500. As long as that level is not breached on a closing basis, on a weekly basis, one can look to accumulate longs for Bank Nifty for higher targets of 53,500 to 54,000 in December.
Okay, Sony, thanks for that view coming in. So those are the levels that Sony is watching out for on the Nifty as well as Nifty bank side. But Sony, a lot of the experts who've been joining us on the show earlier have told us that they believe that this is a stock pickers market. Do you concur with that view? And if yes, what stocks are you flagging off? Where are you seeing some pocket of value coming in amid a beaten down market like this?
Certainly, I think stocks have performed quite well because indices have been quite choppy. But however, indices have also seen a very strong recovery in the last 3 to 4 trading sessions. If we talk about stock specific, today the first sector that has shown very strong momentum is the consumption space. And one stock that is looking quite strong, which has seen a reversal, is Asian Paints. Now, Asian Paint has seen a very strong correction. It is reversing from the levels of supports of 2450 odd levels. You can see it reversing. So today it has given a close above a 2500 mark, which is an option chain breakout as well. So one can buy in Asian Paints in December series of futures, and with a stop loss of 2490, 2480 as a good support, one can hold on to the stock and look for higher targets towards 2570 odd levels. So that's the first stock pick. The second would be in the pharma space. Now, pharma for the last 2 days, very strong momentum. You can see each of the pharma spaces, sectors and stocks absolutely performing quite strongly. So, pharma, we have a buy pick in Syngene as of now, which has given a breakout above 910. It's an option chain breakout. So, one can buy Syngene on small declines up to 9110 and keep a stop loss of 900. Look for higher targets of 950 for December.
Absolutely. The two stocks that you've recommended on the buy side. All right. So Syngene is your trade coming in on the buy side. Thanks very much, Sony, for that view coming in and the two recommendation for our viewers. Moving on, in fact, let's get you some more expert opinions. Aman Chauhan, we did speak to him from Abacus Asset Management, and he spoke about his views on infrastructure space. He is bullish on the growth of the sector going forward. Let's listen in exactly what is his rationale.
We are very positive on this sector, even prior to the election and even now. Obviously, elections are only state specific, but pan India, we expect government spending to pick up. Government is aware that on the fringe, demand has not picked up. In the first half of the current year, any corporate you would have spoken to, they would have all said that second half is going to be better, things will pick up. Diwali this year is going to be good, post that there is going to be a marriage season. So far, it is not picked up the way one would have expected, and hence the government is aware of this. I believe in the next, or maybe they have already started, there is going to be a higher focus on government spending, and that's anyway positive for the whole sector. And more on so the EPC companies, the infra companies, they all trade between 15, 17, 18 times forward 26 earning, which in this market on a relative basis is still something which is attractive rather than paying a 40, 50p somewhere else where demand is slowing down. So from that perspective, it still makes sense to look at this sector.
That's a word coming in from Aman Chauhan, but while there's so much momentum that's being seen in the PSU space, when you take a look at this on the broader basis, PSUs are all down anywhere between 10 and 30% from their 52-week highs. But are they now ripe for a rally after this correction? Is this correction over? Can we expect some more consolidation going ahead? Sharad is joining us with all the factors to watch and keep in mind when it comes to this entire PSU basket of stocks. Sharad, take it away.
Well, yes, PSUs are back in focus, and of course, there are certain reasons why they are actually in focus, and they have been buzzing over the last two trading sessions as well. Now, the government's order backlog that's expected to be cleared as per analysts, and interestingly, there has been a big win for NDA-led government in the state of Maharashtra as well. Now, this parliament session has also started, especially announcements have started pouring in, especially on shipping and exports. That is something which the market is actually looking forward to. And also interestingly, a week ago, DIPAM tweaked the capital norms for value creation. Now, this is for various actions such as buyback, share split, dividend, bonus as well. If you look at the PSU stocks as well, they have corrected. Now, there has been a significant correction. You could say roughly, you could say 13% from 2024 highs as well. But now let's look at what the brokerages have stated. Kotak Securities, they have stated that the government's focus would be on execution instead of stimulus announcements. And Macquarie also has stated that the capex must rise almost by 52% in the second half of FY25 as well. Also, there are certain risks also. And there are three major risks. The first one is being the execution. Any delay in that might be actually impacting the budget as well. Also, the inflation and the rising geopolitical tensions across the board, be it US's tariff announcements or issues in the Middle East, all impacting the PSUs as well, especially on the global supply chain front. Now, apart from this, now let's look at how the correction has actually panned out over the last 3 months. The names over here, we have Cochin Shipyard, FMTC, MRPL, IRCON making it to the list where the losses have been more than 25%. Also, to this list, if you look at it, we have Bharat Dynamics, Midhani and Hutco, RVNL as well. Apart from this correction, we have taken an analysis of at least 10 analysts tracking the stock of the BSE PSU index, and the stocks with the highest 12-month target price or potential. This looks is REC, LIC, Coal India, ONGC and Union Bank as well. Also making it to the list, there are stocks such as HAL, Canara Bank, Bank of Baroda, Oil India and even PFC coming, where there is a strong potential over the next 12 months as per the analysts.
Thanks very much. So 25 to 30% is the upside potential that experts see on many of the PSU stocks. Thanks very much, Sharad, for highlighting that. Moving on, let's get you some data from FNO. How did derivative market fared out today, especially when there's a short built-up trend which we've seen on Nifty. In fact, Nifty was Nifty, Bank Nifty both started to drag when they opened. For Bank Nifty, though we have ended the day with on a flat note, for Nifty, it's a mild short built-up trend which we have spotted from the derivative space. Now, India VIX is at 15.3. It was not much of volatility, and what we saw was that it was flat to positive what VIX was trading. But the maximum call writing which happened of the upper strikes happened to be at 24,300, 24,400. This happens to be the resistance now, but market did find a support also. If you go by the action, 24,100 and even 24,000 strikes, there is where the maximum of the put writing happened. So this seems to be the support for market right now.
Absolutely. It's quite strange because yesterday we were seeing some long build up on Nifty. Today we are seeing mild short build up. Yesterday Bank Nifty was short covering, and today it's flat. So it's just taken one trading session wherein the cuts have not been that deep, but it's just taken one trading session for the derivative sentiment to change. So that's something that's really interesting that I just wanted to flag off. But on that note, let's also talk about another stock today that was in focus, was a high flyer today, and that's Vodafone Idea. Now, it's a big relief coming in for the telecom company Vodafone Idea as the cabinet has cleared bank guarantee waiver for telcos. Let's go across and listen into Nikunj Dalmia's take on the same and what he has to make of this entire process that's been undertaken and now this regulation that's come out by the authorities. So let's go across and listen in.
Anything at 7 rupees for Vodafone is good news. Let me put it this way. I mean, the stock is beaten down. It's just been beaten down profusely. And anything which is incremental positive could certainly have a big move for Vodafone Idea. Now, what is the impact of the news here? The impact of the news here is that, of course, Vodafone, they have a large debt, and if they do not have to give that bank guarantee, because Vodafone Idea is now a government company, hardly owned by the AB Birla Group in terms of the large and the majority ownership, which means when government guarantee is not being given, cash flow would be released, and that in a sense will help companies operating interest outgo, and it will have an impact on the bottom line. That's one. Second, this also could be an indirect indication coming from the government that they really want the franchise to revive and survive, because ultimately it's the government which now in a sense will, since they are the majority owner here, whatever decision making which would be done at the center with regards to Vodafone Idea surely will have an impact on the government's commitment to it. The problem with Vodafone Idea is that once bitten, twice shy. It's a stock when they raised money via, when they raised money earlier this year, the who's who had really invested in it, and they've really burned their finger. So every time the stock's going to go higher, you are likely to see a meaningful supply. So this news surely will have a rub-off effect for Vodafone Idea in terms of the signal coming from the government, in terms of an incremental improvement in their cash flow and the interest outgo. But the supply, and because the equity value of Vodafone Idea was bloated after this fundraise, the supply is just going to be unlimited in the short term. So is this the turn for Vodafone Idea? Well, the stock can surely stop falling. But any incremental big appreciation of 10-15% in the near term for next couple of weeks and for next couple of months may just run into resistance of supply.
Okay, so there could be some more supply coming in for Idea. That's what Nikunj had to say on this particular segment of news. But Ria is standing by to talk us about the JP Morgan recent note wherein they have initiated a coverage on select defense plays, citing an overweight stance on BEL as well as HAL and a neutral stance for Mescon. Ria is here with more details on that.
JP Morgan has come out with a note on the defense pack, specifically on some defense PSUs. For BEL, they've initiated coverage with an overweight rating and a target price of Rs 340, indicating an upside of around 16%. For HAL, they've initiated with an overweight rating and a target price of Rs 5,135, an upside of almost 20%. And for Mescon, they've initiated a neutral rating with a target price of Rs 4,248. Although they've said that for exposure to structural growth, BEL is the preferred pick for them. Now, further, they've said that over the past decade, the Indian government has managed to achieve a paradigm shift in their defense procurement policy, which has led to imports now being considered as an option of last resort. And further, the defense exports have rapidly increased. We've seen a 46% CAGR growth over the last 7 years. Now, India's defense sector presents a very long runway of structural and value accretive growth going forward due to the increasing capex, which is estimated at $150 billion over the next 5 years, compared to just $85 billion that we saw over the previous 5 years. Now, fundamentally, the sector is still in the very early stages of a long runway for growth, with the 3-year estimated order inflows at 150% of the FY24 total order backlog of these 3 companies. And JP Morgan has also said that these companies offer a 15 to 17% EPS CAGR with high ROEs of 23 to 33%. Lastly, they've also highlighted that the recent stock price correction that we saw presents a very good buying opportunity. Remember that the entire defense pack had corrected in the range of 11 to 56% from the 52-week highs. Specifically, BEL saw a decline of 14%, HAL of 25%, and Mescon of around 29% from their respective 52-week highs. Now, reacting to this note coming in from JP Morgan, all of these stocks are trading with gains of 2 to 5% today, so keep an eye out on all of these stocks.
Thanks for taking us through that note. On the back of this note coming in, select defense names were in focus, but let's also take it across to my colleague Gaurav, who's here with a list of another basket of stocks that were in focus today on the back of their individual news flows. Gaurav, take it away.
Well, yes, Angel One is going to be in focus because now SEBI has granted certificate of registration to Angel One Mutual Fund. Now, Angel One will act as an asset management company for Angel One Mutual Fund, and as a result, we saw a sharp uptick in this counter. Next, let's talk about Zomato because company has launched its QIP of around 8,500 crore rupees. The floor price is set at around 265 rupees, while the indicative offer price is set at around 252 rupees. Other than that, KA Industries was also in focus because this company also came up with the QIP. QIP size is around 2,000 crore rupees when the company company has set a floor price of around 3,880 rupees, and an indicative issue price is going to be around 3,800 rupees. Other than that, Ashoka Buildcon was in focus, and the reason being that company has got a letter of acceptance from NHAI for the project worth 1,391 crore rupees. New India Assurance was also in focus because this company has got some ruling from income tax in their favor, and this will result into a tax refund of around 1,945 crore rupees for the company. Lastly, we also saw Swiggy was buzzing today, and the reason being that UBS has initiated with buy rating and a target price of 515 rupees on this stock. What they are saying is that the company is well positioned when it comes to peers like Zomato, because it is trading at around 35% discount, and the company also has some growth headroom to growth. So definitely watching out on all these counters on the back of the news flow as well as brokerage note that we have received today.
So brokerage notes and individual news flows keeping this entire basket of stocks abuzz. Thanks, Gaurav, for taking us through that. But let's also revisit the interaction that we had earlier in the day with Harmohan Sahni, the CEO at Raymond Realty. He says when it comes to cash that they have enough significant capital to drive growth, and there is no need for additional capital for at least the next 2 years. Let's go across and listen into what he had to tell us earlier in the day.
We have significant amount of cash today itself on the balance sheet, which will be used for growth going forward. And the existing projects that we've got 6 projects already off the ground, and looking at more projects in the next 6 months, which will be off the ground and hit the market. There is a significant amount of cash flow which these projects are generating and will continue to generate going forward. So at least for next 2 years, we don't see any need for raising capital as of now, unless circumstances change for us that we look at a much larger expansion. But I think we are already quite ambitious, and given that ambition itself will be self-funding, and it will be coming out of our internal accruals itself. Going forward in the next 6 to 9 months, you will see another approximately 2 to 3,000 crores of GDV from our side, which will be launched in the market in different micro markets within MMR itself.
All right, with this, it's a wrap on this edition of Your Trades. Thank you so much for watching.
If you like this video, then like, share and subscribe to ET Now.